this is clearly a very important week for earnings across the board, and that could set the tone for the AI trade going into the end of the year as well as for 2026. And if you look at earnings so far coming into this quarter, they have been pretty good. But I think two factors investors will be paying attention to very closely. Number one is CapEx guidance from these hyperscalers. Now, ideally, you want to see CapEx revised to the upside because that suggests that there is confidence in this AI build-out that we're seeing. And number two, you also want to see positive surprises when it comes to AI revenues across the board, right? Be it cloud infrastructure, digital ads, search, because that provides a justification for this investment and for this build-out that we're seeing. And it's really the CapEx and monetization interplay that will drive the markets forward into 2026.
I'm looking at your notes here. Hyperscaler CapEx could reach $350 billion this year, $490 billion next year. Those are enormous stakes. What happens if the CapEx guidance does not match expectations?
Well, if the CapEx guidance does not match expectations, that suggests that maybe the hyperscalers are not seeing the kind of efficiencies that they expected out of AI, and that maybe some of the innovation that we expected out of AI is tapering off. But we don't think that that is the case. If you look at demand for AI compute on the other end today, demand outstrips supply for almost a 10-to-1 equation there. And so you have, traditional enterprises, you have all this innovation that is on the other end. And when you think about consumer use of AI as well, ChatGPT and some of the other apps, we're seeing really strong numbers from those companies also. So this is really an opportunity for the hyperscalers to continue to invest and monetize all that demand.
When you look at that CapEx, is it a concern in your mind at all that perhaps it's leading to a bubble?
Well, in our view, it is actually a healthy sign that the market is concerned about this being a bubble. But that said, if you look at AI multiples, they are nowhere near previous bubbles that we have seen, like the dot-com bubble. And on the other hand, AI is being funded by actual real cash flows. So if monetization scales, we think that this investment cycle will scale. And today, from an investor's perspective and from an allocator's perspective, as this AI J-curve accelerates, I think the bigger risk is of leaving returns on the table.
Everyone talks about an AI bubble, whether there's a sort of, indiscriminate spending, almost too much spending in this space, and that it's going to catch up to us at some point. Where do you land on that topic?
Yeah, my view is that the technology of AI is truly transformative, and it will continue to be over the next decade or more in terms of what it's done. I was thinking about this yesterday. If you think about 100 years ago, where most houses didn't have electricity or had cars in the driveways, that to me is what's happening at this point. It's we're changing transportation with AI, and we're changing the way households will work and how workplaces will work with robotics, and I think that's incredibly exciting. And Tesla aims to be at the forefront of that.
How are chips going to play into this? I do wonder. That's not something we heard about, right?
That's where I wanted to go to, because the action right now on AMD and NVIDIA, now NVIDIA does have the big GTC Washington conference, is so bullish. Now, Broadcom is right, just talking about how their deal with Google is really good, but that's so bullish. And NVIDIA was up. It started moving around 4. And I just think that people are buying it. I don't look. I'm big NVIDIA. I own it, don't trade it. But that anyone has any knowledge about what that deal is kind of shocking, since it's not been brought up at all.
Right. Well, we should point out there's no assumption of any sales at this point from NVIDIA to China.
$50 billion right now, zero.
Right. It was a $50 billion overall market, but they obviously were an important player in that market. That has changed dramatically. Right. And meanwhile, if they do sell stuff there, the U.S. government's going to get 15% of the revenue.
Oh, yeah,
Don't
I forgot
forget
about that revenue share deal.
Yeah, the weird revenue share. But
better than the quantum deal. We didn't see any quantum deal over the weekend.
No.
But those stocks are still moving up.
But, Carla, the larger point, if there was a deal with China, it might also include at least them actually buying some of these chips that are made for the Chinese market specifically.
In the meantime, NVIDIA, David, $4 trillion, big meeting tomorrow. Jensen Huang, Washington GTC. These companies just keep moving. There's a piece this morning by Righteous over at Melly is talking about how great
4.6 trillion. Wait,
Google's
what's going
doing.
on? Tell people what's going on in Washington.
Oh, Jensen Huang speaking.
Yes,
but well, you know, he does a visionary keynote. He'll talk about the Feynman, Richard Feynman. That's the next chip after Vera Rubin, the Richard Feynman. I don't know. When I read his book, you got to be more science oriented when you read those books. I don't know if you read his stuff at all, Feynman.
No, I read The Making of the Atomic Bomb, and that was tough enough.
Yeah.
That was tough enough.
Okay. All right.
Yeah.
But anyway, I mean, Apple is good. You got good news possibly tomorrow from NVIDIA. You have this Microsoft piece, the monopoly piece. I mean, you just keep reading great things about these big cap companies. Broadcom is it's Google and Broadcom that Mellius did. I mean, Broadcom is a huge company that we never talk about.
Well, we don't never talk about it, but you're right. It's actually hitting 1.7 trillion in market cap.
Real competitor.
So it is one of those
NVIDIA.
10 that I mentioned that make up more than 40% of the S&P.
Speaking of the chips, we got some breaking news this morning out of Qualcomm, and for that, we'll turn to Christina Partsinevelos. Morning, Christina.
Good morning, Carl. Well, Qualcomm just announced it's taking on NVIDIA in AI chips, a massive pivot for a company that built its empire on smartphones. So they're launching new data center AI chips starting in 2026, and they also just announced their first major customer. That would be Saudi-backed AI startup Humane, targeting roughly 200 megawatts of capacity starting in 2026. So they're not essentially going after AI training. That's the market that made NVIDIA worth over $4 trillion. Qualcomm is targeting inference. That's running AI models, not necessarily building them. So every time you use ChatGPT or generate an AI image, that's inference. So training builds the models, inference uses them billions of times a day. Qualcomm thinks the market is going to be enormous. Nearly $6 trillion, almost $7 trillion in data center spending is expected through 2030, according to McKinsey. And so just capturing about 5 to 10%, maybe just even 5% of that market would transform Qualcomm's business. Their products are complete server systems based on their Hexagon NPU, so that'd be neural processing unit chips, already used in billions of smartphones around the world. One key advantage, and this is where it gets a little technical, it's 768 gigabytes of memory per card. They're saying that's more than what NVIDIA and AMD offer in this particular rack type setting. That matters, though, for running larger AI models. And so this is where Qualcomm hopes to compete. They'll sell these complete systems that you're seeing on your screen right now or also individual components. Qualcomm says even NVIDIA or AMD could become customers for some of their parts. But the timing really matters because, for example, OpenAI recently announced it's buying chips from AMD, showing big AI companies want alternatives to NVIDIA, especially within the inference market. But Qualcomm only named one customer so far. There's no pricing details. They're launching in 2026, which is years behind NVIDIA's dominance. But there's no taking away from the fact that this is a big new market for Qualcomm, guys.
Yeah, and I mean, as you point out, Christina, no shortage of potential competitors, obviously AMD and NVIDIA, but others as well. And sometimes I don't think we talk enough about the fact that Alphabet, I mean, their TPU is for inference as well, right?
Right.
And gives them potentially a leg up to a certain extent. This is kind of a different subject, but on a cost per token basis in terms of what it costs them. And a lot of this goes back to that, I guess, for the hyperscalers. What is what's the cost per token going to be? I don't know where this thing's going to get priced and what it's going to be able to do, but that will become important.
Yeah, normally in the chip world, they refer to it as total cost of ownership, TCO. And so Qualcomm didn't provide specific details. A lot of companies, how they benchmark it is different. They're saying that the total cost of ownership will be cheaper because of the power efficiency of said chips, because these aren't GPUs that are using a lot more power. The NPUs and more custom-made chips tend to use a lot less. So that's going to be their selling point going forward. I'm sure in the coming months, they'll reveal some more data around that. But to your point, Google really stands out. Even Jensen Huang from NVIDIA has spoken many times about just how advanced Google has become in the TPU market, and just they've been here for a long time. This isn't a company that just made a chip, 5 years ago. So that's another company to look out for, no doubt.
All right, I hope you're all doing great today. Today, Qualcomm announced the AI 200 and AI 250 rack scale solutions featuring a rich software stack and seamless compatibility with leading AI frameworks. These products are part of a multi-generation data center AI inference roadmap with an annual cadence. The AI 200 and AI 250 are expected to be commercially available in 2026 and 2027. Also today, Saudi Arabia's Humane announced they are aiming to deploy 200 megawatts of Qualcomm's AI rack solutions starting in 2026. I have a few quick thoughts on this news. As I've said repeatedly on this channel, there's plenty of room in this market for NVIDIA, AMD, Broadcom, Qualcomm, and others to all succeed as demand is so extremely strong. I do not view today's Qualcomm news as a major negative for NVIDIA, not at all. Rather, I view it as another indication that the world continues to be severely compute constrained in the face of extremely strong AI demand. Additionally, Qualcomm's rack-scale solutions are aimed at inference, not training. I think targeting inference is the right move on Qualcomm's part as training continues to be dominated by NVIDIA. And while training is dominated by NVIDIA, NVIDIA has also demonstrated that their systems are great at inference as well. All of that to say that today's news is great for Qualcomm shareholders and also not a major problem for NVIDIA. This is not zero-sum. There's plenty of room in this market for multiple companies to succeed. The time has finally arrived. Jensen Huang is scheduled to deliver a keynote address at NVIDIA GTC in Washington, D.C. this Tuesday, October 28th, starting at 12 p.m. Eastern. Jensen told us on NVIDIA's last earnings call that he is anxious to share more details about Rubin with us at GTC. As far as we know, Rubin is still on track to launch in 2026. We also may learn more about Rubin CPX, which is scheduled to launch at the end of 2026. I also hope we'll get an update on NVIDIA's progress in quantum, and I expect we'll also learn more about NVIDIA's data center product roadmap. Since this GTC event is being held in Washington, D.C., let's see if we get any announcements of sovereign AI initiatives with the U.S. government or large-scale projects with U.S. companies. Jensen usually announces large-scale projects that are unique to the region where the GTC event is being held. Then on Wednesday morning, we have a fireside chat with Jensen Huang and Google Cloud CEO starting at 9 a.m. Eastern. We also have FOMC Wednesday afternoon. And after market close on Wednesday, we get earnings from Alphabet, Meta, and Microsoft. Then on Thursday, we have Amazon earnings. What these four companies say about CapEx guidance and their AI strategies will have an important impact on how NVIDIA trades in the short term. So be prepared for some potential volatility. Alphabet is seeing strong demand for their many AI apps and tools. So I would be surprised if they don't raise their CapEx guidance. As for Meta, I'm interested to hear what they say about 2026 CapEx. On their last earnings call, Meta spoke about expecting significant CapEx in 2026. And now, let's see if we get more details on that topic this earnings season. Microsoft is a bit more nuanced, and I want you to listen to me carefully on this one. So Microsoft told us last earnings season that CapEx would grow at a slower rate in fiscal 2026 than it did in fiscal 2025 as their mix of spending shifts away from the external costs of the data center, such as land utilities, etc., and shifts more towards short-lived assets inside the data center, such as CPUs and GPUs. I expect Microsoft to continue spending heavily on NVIDIA systems, given their previous commentary. At the same time, it is entirely possible that Microsoft's total CapEx number could grow at a lesser rate than what some market participants are expecting. But even if that were to happen, Microsoft would continue spending big on hardware from NVIDIA inside the data centers regardless of what the total CapEx number turns out to be. They're shifting their spend more toward assets inside the data center, which is positive for NVIDIA. Microsoft CFO said last earnings that they continue to be supply constrained, and now let's see if we get more commentary like that on this earnings call. I'm also very curious to hear more about Microsoft's strategy of leasing capacity from other companies. Microsoft CEO said earlier this year that in addition to building their own data centers, Microsoft would lease a lot of capacity from other companies even into 2027 and 2028. That bodes well for companies like Iron, by the way. With all of this in mind, it is going to be very important to listen in a Microsoft's earnings call to understand what's actually going on because there's a lot of nuance here. As for Amazon, market participants will be looking for a re-acceleration of AWS growth. Many market participants are of the view that Amazon hasn't been spending enough on NVIDIA hardware recently. Let's see what they have to say on the call this Thursday. I continue to be bullish on NVIDIA long-term, and I genuinely think that most analysts continue to underestimate NVIDIA's long-term growth. I cannot tell you what the stock is going to do in short-term, but I think this company will be worth substantially more in future years than it is today. NVIDIA currently trades at a lower forward multiple than both Costco and Walmart. Yes, the most important company in the world trades at a lower forward multiple than retailers. And NVIDIA's growth will almost certainly be greater than both Costco and Walmart's. Why is this important? It means that it's only a matter of time before NVIDIA moves higher. While the financial press is hyperventilating about bubbles and shocked by NVIDIA's market cap nearing $5 trillion, the reality is that NVIDIA's current valuation is more than justified by its earnings growth and future projected growth. And as I said, I think most analysts' long-term projections continue to be too low given what is ahead. This is not hype, it's fact. Right now, we are in the early stages of agentic AI being introduced to the general public. I expect agentic AI to lead to a surge in compute demand similar to the surge in demand we saw from the introduction of advanced reasoning models and inference. I expect this surge in compute demand to extend well into 2026. And Jensen seems to agree with this given his commentary about agentic AI on NVIDIA's last earnings call. Looking beyond agentic AI, we are in the very early stages of physical physical AI being introduced to the public. I am completely serious and not hyperbolic whatsoever when I say to you that I think NVIDIA's physical AI business may eventually be larger than their current data center business. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach and establishing themselves as the indispensable foundation of physical AI. Over 2 million developers are already building on the NVIDIA robotics stack. This long-term growth opportunity does not get anywhere near enough attention. Physical AI is going to fundamentally transform society in the coming years, and NVIDIA stands to benefit massively. In addition to physical AI, we also have quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. Jensen also told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they are now going to do the same thing with QPUs. In addition to physical AI and quantum computing, NVIDIA has multiple other large long-term growth opportunities that they are really just starting to capitalize on in a meaningful way, including sovereign AI, enterprise AI, and many AI native startups. These opportunities will increase the need for compute even further. And let's not lose sight of what is fundamentally happening here. We are currently seeing two exponential curves of growth: the exponential growth of AI's usage and the exponential growth of AI's improvement. Both of these growth curves are compounding the need for more compute. Additionally, new use cases continue to be developed, which will also increase the need for more compute. NVIDIA is providing compute to a world that is severely compute constrained and will likely continue to be severely compute constrained for at least the next few years. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.